Imagine this. You wake up, roll over, grab your phone like you always do, and you see a notification. Your digital companion, not, some game character you grinded for hours or a static NFT you bought, but this. This pet that's just there, it just earned you $10. Seriously. It sounds pretty out there, right? Like something from a sci-fi book. But this isn't about just flipping some digital art. We're talking about a digital pet that's, kind of alive. It evolves, interacts, and it's actually part of a real economy. Welcome to the Deep Dive. Today, we are plunging headfirst into this strange, sometimes baffling, but honestly fascinating world of blockchain virtual pets. Pets with real, tangible crypto value. Our mission today. Let's unpack how these digital companions actually work. What kind of value do they really hold? And maybe figure out if they're more than just a passing fad. We might even challenge some basic ideas about ownership, assets, even what companionship means now. Okay, let's just dive right in. Because the first thought might be, it's just a fancy Tamagotchi, right? And yeah, I get the nostalgia. But the difference here is...
Well, it's fundamental. These aren't just files on some company's server. It goes way beyond just, clicking feed. So for our listeners who are already kind of savvy with crypto, what makes these pets different? What gives them this inherent value that my old keychain pet definitely didn't have?
Right. And that's the key distinction. What's really fascinating is that their entire existence is anchored on the blockchain itself. We're not talking about code on a single server that, can just vanish if the company folds. No, these companions exist as NFTs, non-fungible tokens, mostly on decentralized ledgers. So each pet is unique, verifiably owned, transparently tracked. Think of it like a digital deed, often built on standards like ERC 721.
Yeah.
Everything about it, its genetics, its whole history, even dynamic stuff like moods or health, it's either stored right on chain in NFT's metadata, or it's securely linked, maybe via IPFS, with the smart contract guaranteeing its integrity.
Okay, digital deed. So it's not just a picture, it's the actual record of the pet itself.
Exactly. And this encoding in smart contracts, that's what enables, let's call it programmable digital life. It's not just text describing it, it's actual logic. These contracts define the rules, how it breeds, how it evolves, how it interacts in its little world. And this cryptographic immutability, combined with that verifiable uniqueness, that creates real digital scarcity and identity. That's fundamental to their value, both perceived and actual market value. No two are the same. And unlike that old toy where the batteries die or a game item that gets deleted, these creatures genuinely live on-chain, forever, governed by rules everyone can see. It's a huge shift from traditional digital ownership, where you often just license things.
Like, you don't really own your game skins both the time.
Precisely. Here, you actually own this digital creature.
That is a powerful difference. Okay, so programmable digital deeds, unique on-chain. But what about changes? What if the platform updates things? Or, smart contracts can have bugs, right? How immutable is this life if the code itself might have flaws or the whole ecosystem changes around it?
That's a really excellent point, and it's crucial. You're right. While the deployed code on the blockchain is immutable, the risk definitely lies in that initial programming. Smart contract audits are absolutely essential to try and catch vulnerabilities. Exploits can happen. We've certainly seen that.
Oh, yeah.
But the immutability also means that once the core rules, like the genetics, are set, they can't just be changed on a whim by one person or company. For the dynamic things, like moods or health, those are usually variables updated by specific actions on-chain, like feeding it or winning a battle, or sometimes through secure oracles bringing outside data onto the chain. It's this mix of, let's say, fixed core logic and dynamic auditable state changes that makes them both robust and interactive. Though, like any complex software, never entirely risk-free.
Got it. So this solid identity and logic is the foundation. But how does that theory turn into, actual money and people actively doing stuff with them beyond just collecting? Because this is where it gets really interesting, I think. People aren't just watching, they're actively, breeding, training, even battling these things for real economic gain.
Exactly right. It's not static. It's an interactive asset, and there's a whole economy springing up around it. The whole idea really got its legs with projects like CryptoKitties way back when that kind of showed the potential of unique, breedable digital things on the blockchain.
I remember that. It clogged Ethereum for a bit, didn't it?
It certainly tested the network, yeah.
Yeah.
But since then, the concept has grown massively into what we often call play-to-earn or play-and-earn models. So maybe you own a unique digital dragon, right? Specific traits defined by its smart contract. You can then use it in battles in a game, maybe earning tokens for winning. Or, and this is key, you can breed it with someone else's dragon. And the breeding. that's often governed by pretty complex algorithms in the smart contract simulating genetics. The offspring, the baby dragon, that's a brand new, unique NFT. It inherits traits from both parents, and it's yours. You can raise it, evolve it, battle with it, or yeah, sell it on a marketplace for crypto.
Wow.
These ecosystems create value in lots of ways. Transaction fees, breeding fees, sometimes staking where you lock up tokens for rewards, and of course just the inherent value of rare pets. And we've seen some incredibly rare ones, especially with desirable genes, or maybe they're very early generation. They've sold for tens of thousands, sometimes even hundreds of thousands of dollars.
Hundreds of thousands.
For a digital pet.
Yeah. The value isn't just speculative, though. It's often tied to actual utility within the game, like being better in battles or producing more desirable offspring. Okay, hundreds of thousands for a digital creature you helped create.
Oh.
That's kind of mind-boggling. Are these just like crazy outliers, headline grabbers, or is there a consistent market here? And what makes one worth so much more beyond just being rare? Also, isn't there a huge risk of these economies just imploding like we saw with some early play-to-earn games? How do they keep the value up?
All really good questions, getting right to the core of the whole debate around these economies. Okay, so the huge figures, yes, they often involve extreme rarity or maybe that initial market hype, but there is a consistent secondary market, even if it's volatile, which it definitely is. What drives value besides scarcity? Often it's utility and community. For instance, a pet might have a rare genetic mix that makes it really good in the battle part of the game, so its owner earns more tokens. That gives it value.
Right, direct earning potential.
Exactly. Or maybe it just looks incredibly cool and becomes a status symbol, a collectible. Some platforms are even experimenting with fractional ownership for the really expensive ones. Now, sustainability, that's the million-dollar question, isn't it?
Yeah, seems like it.
Many early models definitely struggled. Too many rewards printed, not enough ways to take tokens out of circulation. Inflation ran wild, but developers are learning. They're building in more sophisticated controls now. Things like dynamic reward adjustments, burning mechanisms for tokens, or even the NFTs themselves. Fees on trading and breeding. And increasingly, treasury management is handled by DAOs, decentralized autonomous organizations. The community votes on economic policy.
So the players themselves have a say in managing inflation.
Potentially, yes. The goal is a closed-loop economy where value circulates and gets reinvested, not just extracted. But honestly, it's still an ongoing experiment in digital economics, very much so.
Okay, now I can totally see why critics look at this and just say, this is silly, a digital bubble, fur and feathers, just another crypto craze. And when you hear those massive numbers, it's easy to think that. But you're saying there's more to it.
Absolutely. I mean, the speculative side is definitely there, no question. But to really get the deeper implications, let's just step back a second. Think about, say, real-world livestock markets.
Okay, like cows.
Exactly. Farmers are already using blockchain ID tags for cattle, tracking them, verifying their history, their health, genetics. It's all transparent, tamper-proof.
Huh. Didn't know that was so widespread.
It's growing. Now think about that. What's the fundamental difference between a virtual cow on a blockchain, maybe programmed to produce some kind of token, and a physical cow that produces milk tracked with its own blockchain ID? Both are assets, right? Both generate value in their own way. One just doesn't moo.
Okay, that's actually a pretty interesting analogy.
It highlights how we're sort of redefining value, isn't it? With these digital pets, you have this incredible audit trail ownership, history, the rules they follow, all thanks to the blockchain. It really pushes back on our old ideas about what makes an asset real. And we're seeing new ways to value them, too, beyond just flipping them. They have utility in their ecosystems. Maybe they generate passive income through staking, or they give you voting rights in the DAO. But we absolutely have to acknowledge the valid criticisms, too.
Right.
The environmental impact of some blockchains, proof of work especially, the risk of rug pulls if projects aren't legit, and the whole regulatory mess. How do you even classify these things legally?
Yeah, the regulatory side seems like a huge question mark.
It is. These are all big challenges the industry is grappling with, moving towards more efficient chains, better governance, trying to build trust.
That makes sense. Connecting the virtual to the tangible, challenging the definition of asset. But let's stick with those challenges. You mentioned rug pulls, project failures. Beyond the environment and regulation, what are the biggest risks for someone wanting to get involved? And how do you protect yourself?
Yeah, that's super important for anyone thinking about this space. The risk of a rug pull where the developers just disappear with the money, or just projects failing because they weren't well managed or the market shifted, That's very real. It's a new, less regulated area.
So how do you avoid that?
Well, first, it's due diligence. You really have to research the team. What's their track record? Is the smart contract audited by a reputable firm? Is the project transparent? Second, community governance through those DAOs can help. If the community has real power over decisions, it limits what a shady founding team can do. It can help keep a project going even if the original devs leave.
So the community can essentially take over.
In some models, yes, or at least guide it. We're also starting to see things like on-chain insurance for smart contract risks, but that's still very early days. And the blockchain's transparency itself helps a bit. You can see the transactions. Often the code is open source. But look, at the end of the day, this is high risk, high reward.
Definitely sounds like it.
Yeah, it requires significant capital. You need to be ready for wild price swings and potential losses. You have to go in with your eyes open, understanding the project specifics, its tokenomics, its long-term plan, if it has one.
With eyes wide open. Got it.
Okay.
Okay, due diligence is key. But looking forward now, this is where it gets even wilder, right? With AI advancing so fast, these pets could get way smarter, not just program responses, but maybe adaptive, interactive. Like, could you really have a carrot NFT that learns your voice, remembers things you talked about, responds in a way that feels, I don't know, personal? Or that wolf idea, adapting based on how you play a game or even trade crypto? How would that even work? Is it LLMs processing our chat, machine learning watching our trades? Are people actually building this stuff yet?
This is exactly where that intersection of AI and blockchain gets incredibly exciting. Building that parrot or wolf, yeah, it's complex. For the voice learning, the conversation memory, you'd likely use large language models, LLMs, probably running off-chain because they're computationally intensive.
Right.
But the results, summaries of chats, maybe specific memory tokens, those could be written back into the NFT's metadata on the blockchain. So you get this permanent, evolving record of your interaction without clogging the chain with raw data.
Ah, okay. So the blockchain stores the essence of the memory.
Kind of, yeah. And for the adaptive wolf, machine learning algorithms could analyze your on-chain actions, your trading, your battle tactics, maybe even who you interact with in a metaverse. That analysis would then feed back to dynamically tweak the wolf's behavior, maybe even update parts of its smart contract logic, if designed that way.
Yeah.
And yes, people are experimenting with this, early days, but we're seeing projects explore AI agents operating in decentralized worlds, or AI embedded directly into NFTs to give them more dynamic personalities. It's not just about having an API call out to some AI service. It's about creating these intelligent agents that live and breathe with the blockchain's immutable data. So yeah, it stops being just collecting a static thing. It becomes entertainment and investment. Companionship meets, well, verifiable digital profit. An asset that learns and grows with you, potentially becoming more valuable because of its unique AI-driven history.
And if we connect this back to the bigger picture,
it
kind of echoes other things we've seen, right? The things that seemed weird at first.
Absolutely. Think about it. People openly laughed at digital pictures of rocks selling for thousands, even millions of dollars just a few years ago.
Yeah, pet rocks on the blockchain, basically.
Exactly. It seemed absurd, frivolous, no substance, and now we call it the NFT movement. It's changed how creators, artists, big brands think about digital ownership and value. So the skepticism around these blockchain pets right now, it's strong, sure, but it could very well follow that same path. What looks like a weird little niche today
Could be mainstream tomorrow.
could be much more accepted, yeah. It's that pattern we see with disruptive tech dismissal, then grudging acceptance. Then maybe it's just part of how things work. It's pointing towards a new kind of digital life, verifiable ownership, maybe even intelligent companionship. It's fundamentally shifting how we think about value online.
Okay, so wrapping up this deep dive then, we've gone from digital pets earning pocket money to potentially AI-driven companions with six-figure price tags. We've seen how they're more than just games. They're unique, verifiable assets on the blockchain with real economic value. They definitely challenge our ideas of pets, assets, ownership in this digital age. We've hit the tech, the economics, the risks, the kind of wild future potential. So for you listening, what does this all mean? How might this change how you think about assets or ownership or even, companionship down the line? Lots to think about there.
Indeed. And maybe the next time someone says crypto is just about, anonymous money flying around, You can gently remind them that sometimes it's also very much about the pets. It's about digital life, scarcity you can prove, code you can program, and economies built on transparency and community. So really, don't be too surprised if one day, maybe not too far off, your neighbor's retirement plan isn't just stocks and bonds, but a thriving digital kennel full of blockchain bunnies, each one unique, generating value, maybe even with its own little AI personality.
A kennel full of blockchain bunnies for retirement. What a thought.
It's a future that's kind of already starting, just
Yeah.
not evenly distributed yet.